Go this way, backwards.
Weird.
I think I did that. All right, guys, 8:05. We're going to get started. My folks in Zoom, if you can hear me, can you just say a yes in the chat there? Okay, cool. Thank you, Zach. All right. Thank you, Garrett. We'll get class started for today. Today is December 2nd. The chapter 14 intro activity was due today. We're going to go over chapter 14 today, and the homework will be due Tuesday, December 9th. The accounting project, I think everyone turned it in. If you did not, it's open through the end of the day today with a 20% penalty. As I have said since day one, the final must be taken in person, either on Tuesday 12/9 or Thursday 12/11. Few people needed to take it early. So the thing I want to say is there's some people that, for whatever reason, cannot take the final in person. So that's just going to be a big fat zero. But you could do your what if grades in Canvas to see where you are. Some of us getting a 0 on the final, it's still worth a lot of points, but maybe you can live with that grade that you're going to get, right? Some of you already have like really high grades in this class. And you like do your what if grades and you're like, man, I can get a 10 on this thing, or I don't even need to take it. Human nature, right? You work hard to get to that position as well. So I won't hold it against you if you don't come to the final, but hey, at least you could just come and do what you know. I get it. And then also some of you are just right on that line. Like, you're so close to the A or you're so close to the B. And so you really need to do well on the final. So I am giving out this review sheet. I'll just go over it first to let me finish the board. The final exam is comprehensive over chapter 13 and 14. It's timed for 80 minutes and there are no check my works. You have to work fast on this thing. So I just want you to know that if you kind of know that you're going to be here Tuesday or if you're not here Tuesday, how do I want to do this? If you know you're going to come on Thursday, that's the one I'd really like to know. I like to know because I'll know if you're here on Tuesday, and then Thursday I kind of like to know, hey, I just decided I'm not going to take it or whatever. Yeah. All right. So looking at this review sheet right here, my Zoomers might want to take a picture of it, but you need to understand how to organize cash inflows, outflows according to operating activities, investing activities, financing activities. That was there's several multiple choice and true false on that. That was chapter 13, the statement of cash flow. Understand which transactions from a list are non-cash transactions that wouldn't affect statement of cash flow. On the chapter 14, which we're going to go over today, you need to have these three ratios memorized. Actually, working capital is not a ratio because it's subtraction. And then there's the current ratio and the quick ratio. Okay, those three you just have to have memorized. And then for the bigger problems, you need to know how to do a statement of cash flow. Just the indirect method for operating activities. There's a horizontal analysis problem, selected journal entries and trial balance from chapter 2, the financial statements from chapter 5. Don't forget, I've showed you this final exam review in Cengage to prepare. It's not for a grade, but the algo problems are just like the final exam. On Thursday, I think we can do this with Zoom folks too. You're going to get some exposure to the true, false, and multiple choice. I actually cut down the true, false, and multiple choice to 16. There are 2 additional exercises and 4 bigger problems. Again, you can find the bigger problems in Cengage. It says 2-hour time limit, but we have adjusted that down to 80 minutes. You have to move fast. I used to teach a 3-hour class, and that's just not what we got going on here. So 80 minutes, and I've gotten this down to 16. Anyway, I'm going to hand this final exam out to the class. If you have a question out there in Zoom, put it out there for me. Any questions in here on the final exam?
Is there a video on there, like, the thing on the sidebar? Will it, like, switch problems?
You mean?
Was it, like, it stayed the same last time? Like, did the same amount of problems and everything?
Yeah, it's the same algo problems.
Okay.
You'll just have different numbers.
Okay.
Is that what happened, or was it?
It was just the same with the numbers. Yeah, so I was just wondering.
Good to know. On the last test it was. Maybe you just got like.
Well, no, I meant like the review like stayed the same numbers the whole like
Oh,
tried to redo it.
that's tricky. I don't know. You're gonna have to let me know because that doesn't. Oh, that was way back chapter 1 you're talking about. Okay.
That was the last one.
Let me know on that. That's a good question. You want a different set of numbers to try and a different set. Gotcha. And you want a fresh start where it's a blank slate.
Yeah.
And it didn't do that.
Mhm.
Yeah, I haven't been able to figure that out. That's a good question though. Any other questions on the Zoom? Okay. So again, Thursday we will do a Jeopardy. Maybe we'll get some extra credit depending on which team wins. We'll play in teams. And I think we can make that work with my Zoomers. The Zoomer people will, depending on how many people are on Zoom, will be 1 or 2 teams. Okay. Moving on, we're going to go on to chapter 14 today. And I am passing out the notes. To be Oh, and you might get your calculators out, a calculator or your smartphone, whichever. But I hope you guys had a nice break. Was it nice and long? And now it's wintry and it's Christmassy. Can you believe it? All right. All right, Zoom people. I'm assuming you can see my notes still. If not, let me know. Alrighty. Well, let's get started. Chapter 14. Can you believe it? This is our last lecture. I'm excited. Okay. So today we're going to talk financial statement analysis. If you get an accounting degree or a finance degree, you might find yourself working for a big company that just does financial statement analysis. Okay. There was a whole department at Cessna Textron called FP&A, which is financial planning and analysis. And their busy time didn't start until after the end of the month. So you know how we're always getting our financial statements, like, so the month closes and you are crazy busy, like the first couple days of the new month, right? Getting all your financial statements, everything ready to go. Well, then after that job is done, the financial statement analysis starts. Okay, so they're just a little bit later for their busy time. And they'd run all these different ratios and run all these reports. So we're going to describe the techniques and tools used to analyze financial statement information, including elements of liquidity, solvency, and profitability using ratios and analysis. Okay. So the basic financial statements provide information that users rely on to make economic decisions. Financial statement users typically evaluate this information along 3 dimensions. They take a look at the liquidity of a company, the solvency, like how are they able to pay their bills, and profitability. So the ratios and the equations fall into 3 kind of buckets. Also, the chapter goes into 2 common techniques used to analyze a company's financial performance and condition. You have analytical methods. The first one is known as horizontal analysis, and the other one is known as vertical analysis. So we're going to learn about horizontal analysis, vertical analysis, and all those ratios today. Both analytical methods and ratios can be used to compare a company's financial performance over time. So sometimes you compare it to yourself, like, hey, what did we look like last year at this time? And then sometimes you compare your stuff to another company in the same industry. The analysis of the relationship of each component in a financial statement to a significant total within the statement is called vertical analysis. Okay, so vertical analysis, let's say if you're looking at your income statement, you're going to take every number as a percentage of like that significant total, like sales. So sales is a pretty significant total on the income statement. So you take everything, each line item, and divide it by sales. And so everything's a percentage of sales, basically. We'll look at that. This next blank is horizontal analysis. Horizontal analysis is an analysis of percent increase and decreases in each line item. Okay, so horizontal kind of goes line by line, like this over this, and vertical goes this number divided by that number, this number divided by sales, this number divided by sales. So therefore the vertical and horizontal. Okay, now the ratios. Let's talk about the liquidity ratios first. Liquidity. Okay, so we have working capital. This one is actually not a ratio, it's a subtraction. That's the one that you need to have memorized for your final. Current ratio and quick ratio. Those 3 are fine. Accounts receivable turnover, number of days, and receivables inventory turnover, and number of days sales and inventory. Those are your liquidity ratios. Next up are the solvency ratios. You examine the ratio of fixed assets to long-term liabilities, liabilities to stockholders' equity, and the times interest earned ratio. And finally, the profitability analyses include these 8 items. Okay, there is a big problem on your homework with 25 of these ratios, whatever that adds up to. It's kind of a booger, and I'm going to help you get started on it. We're going to do some of the hardest ones together today, and then we're going to work together to maybe get them all done today in class if we can. Okay. Here's an example. This is a select income statement for Bukasi Company for 2 recent years ended December 31st. Okay, so we got the previous year and the current year. We have the sales, all this good information. Again, income statement, all the way down to the operating income. Okay, I'm going to show you how to do a horizontal and vertical analysis using these numbers. And oh, by the way, very important, read your directions. This one says to round percentages to 1 decimal place. Okay, so we are going to start with the vertical analysis. Right here, vertical analysis. And that's the one where we take everything as a percentage of sales. Okay. So our significant total is going to be sales. Okay. So, and I'm going to, like, here's my column. So I got to do it for both years. And it might seem obvious to you, but if not, you are going to take sales divided by sales, right? And then I'm going to take it times 100. Okay, so sales divided by sales, that's one. 1 times 100 is 100. And that's what you'd expect for our significant total, actually for both years. Like, you don't even have to do that one. Sales divided by sales times 100 is going to be 100%. Okay, now this is where it gets interesting. The cost of goods sold, I'm going to do this column, the 20Y2. So, and I know it's a negative, so it can be a negative percentage, but I'm going to go 1,337,500. I'm going to divide that by 2,200,000. That's my sales. And then I'm going to take it times 100. So you might want to run that through your calculator with me. Make sure you're putting it in right. Lots of calculator work today. Take it times 100. I know it's going to be negative, and I'm going to go 1 decimal. So it's negative 60.8%. And you might be like me, I don't care about that. Well, it's going to be interesting. I'm just going to put the percent number over here. Pretend we just did that for 20Y1. Negative 62.5%. Okay, you can put the percentage signs if you want. Okay, now gross profit 862,500, and I'm going to divide that by sales again. Okay, 862,500 divided by sales. You take it times 100, round to a decimal place, and this becomes 39.2%. This one's positive because this number is positive. And you could have actually done the math. If you think about it, 100 minus 60.8. Right? All right. Then over here, let me just show you this calculation. I just want you to note something. You take your 750,000, and when you divide by sales in this column, you're picking up the sales for that column here. Okay, so whatever year you're in, you're using that sales. So when you're doing this column, you're picking up the sales number for 20Y1. Okay, that becomes 37.5% positive. Okay, the selling and administrative expense, just so you know, is if you take the 440 divided by the 200, that's negative 20.0%. I'm going to be very precise. I'll do the 0.0 for the 1 decimal. And then the 400 divided by the 2 million over here. Again, those are negative. Negative 20.0%. Interesting. Okay, then the total operating income as a percentage of sales. Again, you would just pop this in your calculator. Don't forget to take it times 100, round to 1 decimal point. We got 19.2% in year 2, and the previous year was 17.5%. 19.2% and 17.5%. So numbers, but here's the fun part. We actually do analysis now, and we could make some observations. Like if we looked at sales, our sales went up 200,000, just straight math looking at that. Okay. Our cost of goods sold went down. Okay. It was less of a negative. Okay. It was 62.5% of sales before, and now it's only 60.8. And if I was working in a company someday and I'm in this department and I got to explain why. I got to go back. Okay. Cost of goods sold. Which supplier? Why? How have we saved money on our cost of goods sold? Like that's like the inventory stuff that we brought in. Oh yes, we secured this other supplier, and that is why that has gone down. Okay, the gross profit has gone up as a percent of sales, probably because whatever's going on in the supplier. But looky here, the selling, general, and administrative expensive stayed the same. Rent stayed the same. Anything general. Okay, so when I'm talking about the analysis, it's more than just the numbers. You put words around it, and you have to present it someday, right? It's part of your reporting. Moving on to the next page. This time we're going to do horizontal analysis. And there's a little math equation that I used to teach. Sure, you guys have done this before. It's a percent increase, percent decrease. Okay, so I'm going to use Y for the years. So on the top, you go Y2 minus Y1, and then you divide by year one. Okay, and then you take that whole thing times 100%. Okay, so you take year two minus year one, you divide by year one, take it times 100%. So this column right here, the amount, this is my Y2 minus Y1 column. And then over here, it's after it's kind of the whole thing. I basically have divided and then I turn it into a percent. And then once again, don't forget, it's a 1 decimal place. Okay. So if you look Y2 to Y1, again, these are the same numbers if you're remembering this. Okay, Y2 to Y1, we had a 200,000 increase. So if I put that in my calculator, I'm going to take the 200,000. I'm going to divide by, what do I divide by? Year one amount. In this case, my year one amount is 2 million. And take it times 100. And that is straight up 10%. So I'm going to go 10.0%. So what am I saying there so far? Sales had a 10% increase year over year. Okay. This is the horizontal analysis, line by line. Okay. If we look at this, we had another increase in our cost of goods sold. You could run that through your calculator. The amount of increase is 87,500. And if I took the 87,500, and what do I have to divide it by? Come back up here. I divide by year one. In this case, I'm staying on this line. Year one is 1250000. 1250000. I'm going to take it times 100. And I have 7.0%. 7.0%. Okay, so what does that tell me? My percent increase in cost of goods sold is 7%. Okay, so the cost of goods sold did increase by 7%. Okay, doing the math here, overall gross profit increased. You know what I'm curious about? Did gross profit increase more than the cost of goods sold increased? Like, that's kind of interesting. Like, did I get more profit even though my cost of goods sold increased by 7%? Did I get more gross profit? Okay, that's kind of the analytical mind doing the analysis. Okay, so the difference here is going to be your 112. It increased, gross profit increased. By 112,500. Okay, now I'm going to divide that by the 750, right? So again, following the equation, I'm going to go 112,500. I'm going to divide that by 750,000. I'm going to take it times 100. 15%, 15.0%. Okay, that's cool. So even though my cost of goods did increase by 7%, I was able to get more gross profit, 15%. Okay, now we know this. Let's see, I could do this math. Those administrative expenses increased by 40,000. And if you divide it out, it's still 10%. Okay, percent increase, 10%. And then the whole operating income, this will be interesting. Okay, the difference here is 72.5 increase. And when you divide out your 72.5 divided by your starting value, which was 350, take it times 100, you get a nice 20.7%. So overall operating income increased 20.7%. And we did that by only increasing our cost of goods sold by 7%. Sales did increase as well, and so did our selling expenses. But overall, we had a nice increase in our operating income. Okay, we'll take a look at the homework out there in a minute. But here is help with problem 144A. This is the big one. Get out your calculators. We got to do all these on the problem. Okay. So here's what I have done for you. Here's the problem. Okay. I'm going to mark this sheet up. And we're going to get going on some of these ratios. Take some notes here. The comparative financial statements of Marshall are as follows. The market price of Marshall common stock, underline it, $82.60. We're going to use that on number 16 and number 18. Trust me, you need these notes because you'll get to that 16 and 18. You're like, where's the stock price? Where's the stock price? Okay, so we're taking some notes. Okay, let's look. We got 20Y1 here and 20Y2 here. Okay, just note. We have the comparative retained earnings statement. We have the comparative income statements. We have the comparative balance sheets. Okay. When we do the ratios, here's some notes. The instructions say do ratios to 1 decimal place. Do your ratios to 1 decimal place. Except for the dollar sign ones. I'll point those out to you. Those we will do to 2 places. Okay. Also, watch for ones that are labeled as a percentage. If it's just a ratio, you divide that number by that number and go 1 decimal place. If it's a percentage, that number divided by that number times 100 times 100, 1 decimal place. If it's money, that number divided by that number, 2 decimal place. Are you following me? Okay. The other thing that gets funky on, I kind of flipped through this pretty quickly. We'll go back and kind of get into the math. They give us the equation. It's just plug and chug. But sometimes they start saying things like average inventory. What do they mean by average inventory? Well, they tell you it's beginning plus ending. But let me just write a note here. If the ratio says to do an average, if average, then use your 20Y1 plus your 20Y2 divided by 2. If the ratio says to do an average, you're going to take 20Y1 plus 20Y2 and you're going to divide by 2. So for inventory, that one we just looked at, inventory is going to be on the balance sheet. And so, for example, here would be inventory. If it said, if part of the equation was to do inventory average, you take 420 plus 380 and divide by 2. If it doesn't say average, don't make it harder on yourself. Otherwise, use 20Y2, the most current year. Okay, I put a little star there and we'll start on the 20Y2 columns. Okay, so if it doesn't say average, don't make it harder on yourself. Just use 20Y2 numbers. A couple more things I need to point out that were hard for my eyes to see. I could not find interest expense anywhere. I noticed that it's right here under other expense interest. I'm going to underline that for you. And this is the line of your interest expense. For whatever reason, I had a hard time finding it. Okay. A couple other things to note. When there's a ratio that asks for temporary investments, that is these 3 items: cash, marketable securities, and accounts receivable. And one of the calculations calls for temporary investments. And that's what those 3 things are. Oh, it's the quick ratio. So when you get to the quick ratio, it will say something about temporary investments, and you'll need to, it's basically cash, marketable securities, and accounts receivable. Okay. Couple other things. One of the calculations, we have to do common shares outstanding. Common shares outstanding. And here's how we're going to get to that. Do you see how the dollar amount, most current year, by the way, is 500,000, but it's $5 per stock? That means each stock costs $5. So if I want to know how many shares are outstanding, I'm going to take the 500,000 and I'm going to divide it by the $5 per common stock. And I'm going to know that there are 100,000 shares outstanding of the common stock. And I'm going to do the same thing. Let's see, I did my little arrow. I'm going to do the same thing on the preferred. Okay, so if I was going to calculate preferred shares outstanding, I would take my 250,000 and divide it by its 5. And then I would know that I have 50,000 shares outstanding of the preferred stock. Okay. Now let me just look and see if there's anything else that I need to share. Okay, after you get that done, turn the next page. I have a nice little summary sheet or a recording sheet that we're going to use. This is going to be our little savior here. Because we have the 18 ratios. As you know, when you have a ratio, you have a numerator or the number on the top, and you're going to divide by the denominator. So we're going to have a nice little place to show our work here. Now, notice that this working, cross out the word ratio here. This is the first one is working capital. It's not a ratio, it's a subtraction one. Okay, that's why I kind of have it bumped up here. And for whatever reason, I got the wrong word there. So working capital. Also note that these first three are on the final exam, and you have to have them memorized. Okay. Now, we're going to do some of the most difficult ones together. We are going to do 10, 11, and 12. I consider these the most difficult. Now, there's a couple other things to note. Let's go ahead and circle our dollar signs. Those are the two that are money. That'll be 2 decimal places. And let's go ahead and circle our percentages. Those are the ones that after we get the ratio, we're going to take it times 100 and then round to 1 decimal. Okay. Sometimes, like, the most frustrating thing with folks is that they're doing this one and they're getting the right answer, but they're not rounding correctly and they put it in and okay. Are we good so far? Okay. Summer looks like she's like, this does not look fun to me. But here's what we're going to do next. Next, sometimes it might be helpful to tear your little piece of paper apart because we're going to kind of flip back and forth a little bit. I have a couple up here, so it's a little easier for me. But what did I say we're going to do first? We said we're going to do number 10. Well, let's go over here and look at number 10. Number 10 is called times interest earns. We're going to divide. So on the top, the sum of income before tax expense, and we're going to divide by interest expense. Oh, wait. The sum of, okay, see, I already messed up. The sum of income before income tax expense and interest expense by, the word by generally means the division, by interest expense. So I have to find, again, I'm doing the hard ones, the sum of income before income tax expense add back interest expense. I'm gonna divide that by interest expense. What? Okay, so here's what we're gonna do. These two right here. This is the income before income tax expense. But I need to bring in the interest expense. That's what's on the top. And I'm going to divide by the interest expense. That's what's on the bottom. Now, it didn't say anything about average, so I'm staying in column 20Y2. Okay, so here's what I got going on here. On my top, number 10 here, I had the income before was 1020000, and I had to add to it the 132,000, which was right above it. Once I do that, I have this number 1152000, because I added those two numbers together. On the bottom, it said to divide by interest expense, which was that 132,000 number. Okay, this is a simple ratio. Okay, it's not a dollar sign, it's not a money. So I'm going to put on the top here my 1152000. I'm going to divide by 132000. And I don't need to do anything else, but I do need to round to one decimal place. And it happens to be 8.7. That's one for your homework. It's the real homework, y'all. It's a real homework. Asset turnover. Let's read what asset turnover is. Asset turnover. Divide sales by average total assets. I wish that was all it was. That sounds easy. I mean, I still would have to do the average. But look, it goes on. So I have to find average total assets, but first I have to exclude long-term investments. Ugh, for both years. What? Okay, well, the top's easy. On the top, we're gonna got sales. And then we're gonna divide. Got the word by kind of means divide. So we gotta find average total assets, but we gotta subtract long-term investments. What the heck? Well, let's find sales. Sales should be on the income statement. And on the sales, I didn't say average sales on that one. Okay, so we're just picking up this number right here. That's our top number. Let's do that one. Asset turnover, 10,850,000. Okay. Now, the other one said total assets minus long-term investments. Total assets minus long-term investments. I've got mine right here. I got too many sheets though. Let me show you. Sets are on the balance sheet. Oh, and here's the long-term investments right here. So I got to take 9024 minus the 800. And then I have to go 8254 minus the 800. Now I'm truncating the zeros because I know that math will work. Once I get those two numbers, I'm going to add them together and divide by 2 to get that number. Okay. 9024 minus 800 is 8224000. 8254 minus 800 is 7454000. So I'm going to move this math over to my sheet, if you don't mind. 8224. Again, you might want to rip it apart. 8224000 plus 7454000 divide by 2, and I'll have that average total assets less long-term investments. So I gotta do that real quick. 8224 plus 7454 equals divide by 2. That is 7839, and I have to put my zeros back on. Okay, so top number 10,850,000. Bottom number 7,839,000. Just a ratio. Let's put it in our calculator. See if you get the same thing I did. 10,850,000 divide by 7,839,000 equals. Okay. 1.38. What am I going to put down there? Rounding to one decimal. 1.4, baby. Now, the truncating zeros thing, if everything has 3 zeros on it, can you just not do it? Yes. Sometimes I get freaked out and I do it anyway. Whatever. Okay, next one. Actually, we're going to do this one together too. These are the hard ones. So if you're getting it, you're grasping it, you're going to be great. Okay, return on total assets. Let's see what that said. Okay, return on total assets. We're going to divide the sum of net income and interest expense divided by average total assets. We can do that. That doesn't seem bad. So we have to find net income and add back the interest expense. And then we have to do the average total asset thingy-majig. Okay? So net income, here's our net income, 600,000. And I'm going to add back the interest expense of 132. Right? 600,000 plus 132, that's 732,000 on the top. Got our top number. Okay. Now on our bottom number, average total assets. Average total assets. Assets are on the balance sheet. Total assets here. It's the 9024 plus 8254 divided by 2. 9024 plus 8254 divided by 2. Eight, 6, 3, 9, 0, 0, 0. Okay, now I have my two numbers. I have my 732,000 on the top, and I have my 8639 on the bottom. Okay, so I could practice truncating my zeros because I could equally take off the 3 zeros. I'm going to get the same number. 732 divided by 8639 equals, ooh, this one's a percentage. So I have to take this number times 100, and now I have to round. So this is basically 8.5%. Isn't this fun? You hate it? It's just plug and chug, people. Okay, we're getting through it. This is your last homework. All right, 13. Third time. Return on stockholders' equity. By the way, it's a percent. Okay, thank you very much. Okay, return on stockholders' equity. We're going to divide net income. That was 600,000. Oh, I remember it. By average total stockholders' equity. Average total stockholders' equity is year 1, year 2 divided by 2. Okay. Net income, I remember, I don't know why, but I remember that net income is 600,000. So I'm going to put it in there. Okay, now let's find stockholders' equity. Get familiar with what we're looking at here. And I think it's on the top. No, it's talking about total stockholders' equity down here on the section of the balance sheet. And it needs average. So 4944 plus 4454, add together, divided by 2. Okay, so that's my bottom number. 4944 plus 4454. Add them together, divide by 2. Four, 6, 9, 9. Leave. And you guys get to do that one on your own. Okay. Now I'm moving on. 14. you do on your own, but 15, I got to give you some clues. 15, 16, 17, and 18, you get clues. You're like, yeah, Miss Sherman, let's end this semester well. Keep it coming. All right, let's go to 15. Take a look at 15. Earnings per share on common stock. You're going to divide net income. I remember net income. It's 600,000. Oh, minus preferred dividends from the retained earnings statement. So we got to take the net income. Then we got to find the ding dang preferred dividends on the retained earnings statement. Subtract it. That's the top. Divide by common shares outstanding. Ooh, we calculated that. Okay, this is fun. I'm having fun. Okay, let's find the net income, and then we have to peek up in the very top, I believe, and find the preferred dividends. Okay, we know net income is 600,000. It said to look up here for preferred dividends. This says dividends, preferred stocks right here. So the top number is 600,000 minus 10,000. So I'm on row 15, earnings per share, common stock. 600,000, oops, let's put in the full zeros this time. 600,000 minus 10,000. That is whatever that is. I know what it is. Okay, and then it says we're going to divide that by common shares outstanding. And we calculated that over here. Remember how we did this little common shares outstanding? Okay, so we're going to divide that by 100,000. Okay, once you do the math on that, this is a dollar sign, you're going to get what I'm going to call the fluffy answer. And you're going to get the fluffy answer. Why is the fluffy answer important? You'll know soon. We're going to use the fluffy answer in another following ratio thing. All right, number 16, price earnings ratio. Price earnings ratio. Let's read it. The price earnings ratio. So we're going to divide the common stock share price given near the top by common earnings per share. Use your answer from requirement 15. Okay. Looking back up here. Hello. Remember how I said we're going to use this on 16 and 18? So the top is the 8260. And you're going to divide by fluffy. I hope. Does this make sense? I hope so. Okay. You're going to take 8260 and you're going to divide by fluffy, and it's a straight ratio, and you're going to round to one decimal. Can you do it? Will you accept the challenge? Okay. Dividends per share common stock. Dividends per share common stock. Let's read it. Number 17. Dividends per share of common stock. We're going to divide the common dividends from the retained earnings statement by common shares outstanding, which we have that. Okay, so all we have to find is the common dividends from the retained earnings statement and divide by, it was 100,000. That was the number of shares outstanding right here. 100,000, 100,000. But the top number was the common dividends. Oh, look, here's the common dividends. 100,000. 100,000 divided by 100,000. Like that. All right, remember that's $1. Oh, and by the way, this one you're going to get, we're going to call it the spiky answer. Spiky. I'd love to see your papers. Are you doing spikies and fluffies? Okay, it's fun. She makes it kind of fun. All right, so on your dividend yield, you're going to take spiky answer and you're going to divide by what? Let's read it. Divide the common dividends per share, your answer from 17, by the market share price, which remember was given up here. 8260, baby. 8260. It's a percentage. You know what to do. All right.
The dollar one you don't divide by 100.
Correct. Good question. Dollar one you don't multiply by 100. Number 7, 8, and 9 is all on your own. Okay. And now we're gonna split up into groups of 4. And we're gonna knock out these other ones. You guys can kind of group up. You can be like, hey, you and you do the first 2. Me and me are gonna do the second 2. And you're just gonna use your data that I've given you. See if you can knock these out. If you like your group and you want to keep working as a group or double checking answers, you can finish the rest of them. So if you seriously want to work all by yourself, that's fine too. But I recommend kind of working and at least coming up with a game plan. So that's what we're going to do for the rest of the class. I'm going to share I'm going to go out here really quick. There. And I just want to show you the homework really quick. Because it's not that bad. And yes, I will share my screen out here. I can figure out how to use this. Sorry. Share, 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 share. All right, so if you take a look at this homework, you're going to do a vertical analysis right here. You're going to do, this is where you're comparing to the, down here. It's still another vertical analysis, but you're comparing it to the electronics industry. You get to do a little analysis on the drop downs. Number 3 is vertical allowance using the balance sheet. Some of these have show me hows. This one is a horizontal analysis of the income statement, just a lot of math. And then your last one here, we've already started doing some of these answers, okay? So one of these problems out here is also on the final exam. You'll see it when you go do the practice final exam. I'm gonna let you guys work, see if you can get these done. Compare answers, split it up with each other if you want. And let's see, who do I got out here? Let's see.
What if it doesn't have a percent per dollar? Do I just develop it?
If it doesn't have a percent per dollar, you just simply do division, top divided by bottom, round. Okay? So it feels like just a bunch of silly little math, but it's actually really an interesting analysis when you start thinking about what these things mean in terms of liquidity, solvency, and profitability. Okay? I do have the, I can come around and if you get stuck on one, I can kind of check and just have your numerator written out nicely in your denominator, and then I can see where you went wrong. Okay? So we have a good 23 minutes. Wait, 25, 26, 28 minutes, really. But don't forget the first one is subtraction. I'll mention this to you guys. We're looking for tutors for accounting and business in El Dorado. We have scholarships available that cover all in-state tuition, books, and fees, as well as also, if you'd rather just be paid $9 an hour Um, I'd recommend any of you guys if you were interested.
So the working capital for this one gonna be negative.
No, the subtraction, if it became negative, switch it around because there might have been a mathy word when it says from. That's a turnaround word, meaning you gotta switch your things the other way. Yeah, if that makes sense.
Is
So-
it the totals though?
The current asset minus current liabilities. Want me to look at your numerator and denominator?
Yeah, I just.
Okay, you're doing total assets, not current assets. So that one's current assets. See right here? And then. Okay. What is the current liabilities on them? I don't have your points. Here's this. Yeah. And yeah. There you go. It's gonna get you the right number. Doing okay? All right, if you need to check anything, just have it written out there, I can check it.
So. For this, for ship or not, divide.
For working capital, you're not about to buy anything. Current ratio is a ratio you will divide. Happens to be the same numbers that you'll do here.
Okay, so that one. I didn't.
You did the wrong way, but yes, yes. And then this time you're gonna, it's basically the same numbers. If you look at what that is, you're gonna divide.
Okay.
Mhm.
Says. Speaking.
Mhm. Read that real quick. There's one that's a divided by 365.
Yeah.
Okay, okay, when you get there, there's one that, there's a 365 in there, kind of weird deal. All right, Zoom land. If you have any questions, email me. Ending the meeting.